It's Monday, August 5th. Quick one up video for you wonderful ladies and gentlemen. Quite the drubbing in the market today, but we did bounce off the 2.618 in the ES at 51.49 quarter. We're currently hovering around the 2 times range. Remember, we go from MA to MA, and in this instance, fib to fib at 52.84 quarter. I think the bulls can continue to bounce as long as they hold 52.79.5 to 52.84 quarter. Below there, it does get a little bit of an iffy situation. We do have an inverted head and shoulders on the bottom, so it is potentially a move to the upside. If we do get a move up, the 2 times range of that would be 54.39. The 2.618 is 55.37.5. And guess what that lines up with? Perfectly with the 7.31 Fed day low. I do think that there is a resistance zone up there, though, so don't just assume end ranges. It's between 55.0275 and 55.37.5. Qs, not exactly an inverted head and shoulders, but there is a potential double bottom. As long as it's above 18,289, we can play the game and do the 2 times range. And that would take you up to 19,215.5. The 2.618 could take you up to 19,788. The Fed day low of day from 731 is 19,310.75. Probably want to put some orders out there if it is achieved. That's just above that 2 times range of 19,215.5. The Fed day high from that day is just below our 2.618 at 19,684. So a similar zone like we talked about from 55.0275 to 55.37.5 in the Qs. You could make the argument it's 19,648 all the way up to 19,848, but I would be a seller up into there. I think it is going to be a tough resistance band because that's where we broke down from. A lot of the market has depended on Japan lately. We saw a huge crash in the Nikkei. If you do /NKD, you'll see we checked back to the breakout at 30,725, and we've bounced pretty hard. The higher low there is 33,260. Below there, it does get dicey. If we do keep bouncing, my guess is we'll start finding some resistance around 36,633, which would be the halfback, and roughly the 200 MA support. Back to the US here. In regard to SPY, it's a similar situation. We had a pretty big pullback. We didn't quite get the 200 MA, which I would have liked to have seen. We did in the NASDAQ, but we did get pretty close to the 2 times range of the head and shoulders at 509.12. If we were to keep slipping, the next big support is obviously the 200 MA at 499.88 and rising. It'll probably be 500 by the time it gets there. The next supports after that are 493.86 down to 491.15, and then we'd see after that it's like 480. So there could be some more. On the upside, if we were to continue bouncing, I think that 100 MA area, gap fill, would be some resistance at 529.29. And then if we were to make it up to 536s, that's the neckline, 536 to 537. That to me would be an area to try to reshort, at least right or right out. I'm not so confident we get back up there right away, but that would be the zone. If you take a look at the Qs, that did get the 200 MA. It actually got the 2.618 of the apples to apple equivalent of the head and shoulders. Wasn't quite as built out in the Qs as it was in the SPY, but we did get it at the 425.77 area. We are over the 200 MA, so guess what? That's your right or right out stop at 429.90. On the bounce, yeah, maybe we'd get the 2 times range at 440.12, and then if we were to get back to the 100 MA, because if we held the 200 MA, we could go to the 100 MA, would be 455.90, and then we'd see that'll probably line up with the 10 MA by the time we get there as well. With regard to the VIX, this was just off the chain today, getting a 65 VIX with a market like this. Someone got caught being short volatility. So what happens usually after this, if the market continues down and volatility makes a lower high, that's a sign that the sellers are exhausting itself. If it does make a higher high, that would confirm a lower tape, assuming we move lower in the market. If it does start to peel back, the problem after you have a volatility spike like this is after the initial pullback, you do tend to get some pops back up to lower highs. And I do think volatility could remain in the 30s and maybe upper 20s for a while. So I would use this opportunity, particularly with pops and volatility, to sell some covered calls against positions, sell some call spreads as a hedge. On VIX pops, if you do want to start layering into longs, you could sell some out of the money put spreads. I don't know if you want to do naked puts depending on account size, or if you really do want to own something, you could always do that and get it cheap. With a VIX spike like this at 65, you could sell stuff that's so far out of the money that even a little bit of a rally would crush the IV so much that the position would be a winner. Careful buying naked calls though, because when IV is super high, you could sometimes see the stock go your way and volatility compress your Vega component, and you wind up having a losing trade just on the volatility component because it's so stretched on these extremes. So what counteracts that? Spreads, because the volatility on both the upside call and the lower strike compress as well, and you're basically left with that price differential. So call spreads are better bets when you have high IV, or shorting out of the money put spreads or just puts, because when that IV contracts, you can get some of that Vega compression plus price appreciation. Bad day for news on the tape also. The fact that Warren Buffett news hit that he sold half his Apple position, which to me, it's crazy that such a large position in Apple was even held this long. I think it was something like half of his portfolio. It made a lot of sense that he sold it, but guess where Apple pulled back to and bounced hard off of? 196.38 to 199.62, which was the prior resistance, which now became support. This was a check back to the breakout. We had a pretty nice rally in Apple, and it was still down 10 points, which is still a lot for Apple. I mean, that's a really big move. I think at some point that gap will fill to 219s, but anything below 224s and 219s does remain a little bit iffy to me. I would love to see this continue to pull back, maybe to the 187-ish area, maybe even 180. I don't know that we're going to fill the 173 gap from 5.2, but it wouldn't surprise me to see a move down to closer to that 200 MA in the 190s, 180s. That zone to me would make some sense. The other big piece of news was Google having that antitrust ruling against them, and I had warned about that, and guess where we pulled back to? We filled the 425 gap at 156, which I told you I thought we would do anyway, after they didn't have the ability to go higher on good numbers. That was also a huge tell before this big pullback. When stocks have good numbers and they can't go still higher, they always pretty much go lower. And we've been warning about that. Big breakout here was 150.97 to 153.78. We stalled just shy of the 200 MA. If we were to keep going, the channel low is down at 147.92. It's currently trading around 160. I do think 169s will be some stiff resistance. That's really where it broke down from. Bitcoin got its comeuppance as well today, the ultimate risk-on, risk-off arbiter, but it was able to close back up above the 200 MA and channel low. You have a higher low in the futures at 54,230. I think that area is a good stop. I don't know if we're going to fill the gap, but if we do, we could get a move back up to that 62,945. My guess is it chops around here. I did actually put on a longer dated trade today in that BITO. The reason I chose BITO, or BITO, was for a few reasons. One, it was on channel low, and two, it's one of the few Bitcoin ETFs that has options. So I went out, I know this is going to sound a little cray, it's not really my style, and I did it small with room to add. I went out to January of 26. I bought the 20-30 call spread and I sold the 14-10 put spread, and I got it on for a 12-cent credit. Yeah, I mean, BITO could continue lower, but 78.6 of the range is 14.68, and the reference lows are down at 9.48. I have a couple of years for this trade to work out. It might not work for me right away, but I think it will eventually, and I did it small with room to add. TLT was up well, but closed off the highs. I do think that 100 area could be some resistance. Careful below 97.74 because that's the 78.6 of the range. And yeah, that to me would be too much. The dollar pulling back, but having a nice bounce here. I think people are just assuming we're going to have a recession. It's very possible, and I do think the Fed may have waited too long here. So the higher low is 102.70. If we keep rallying, 103.567 to 103.65, and then 103.999 are the upside resistance. If we keep pulling back, 101.88 area to me makes sense. That's the 78.6 of the range. I don't know if we're going to retest 100, but very possible. Generally speaking, I'd be very skeptical of up opens here. A lot is going to depend on the overnight, if the bounce holds in Japan or not. And of course, the dollar yen, it got down to those 140 area. That area must hold. If not, I think it's back on to the downside. Markets are rallying. I am always leery of up opens, particularly in down tapes. they tend to get sold into, at least initially. I would have, believed it or not, like to have seen another down open and maybe traders play long. It doesn't mean that we're not going to see a bounce. It's very possible we will. Short term, we are a little oversold, although intermediate term, not as much as you might think. I do think that there could be bounces. If we do get bounces to said levels, maybe look to trim out of some positions you weren't quick enough to get out of, or sell some upside calls, or maybe even do some kind of put spreads playing for a retest or some type of a higher low. Markets don't tend to usually crash from all-time highs, although they did in this instance with the Nikkei. I'm not so sure that the U.S. market continues to do the dumpster dive, but I do think more election uncertainty and seasonality are playing against the bulls here. Keep that in mind. That's it.